So if you look at their PE ratio is actually quite reasonable at 21.93. Now this is one where you have to really expect lots of growth. They are a growth stock. You're not going to get a dividend from them, unfortunately. Now, we touched on price a little bit. If you look at, say, the past year, they're only up 0.59%. Over the past 5 years, they're actually down 26.11%. So not quite ideal if you look at that. And if you look at their past 3 months, which is another period I like to look at, obviously, just because something looks good or bad historically doesn't mean that's going to be doing that going forward. But their past 3 months have been pretty rough, down 30.4%, as with many stocks, but Coinbase, that's especially bad, of course. They also have not been a publicly traded stock for very long. So if you go to Max and you see that it's pretty much the same as the 5-year numbers, that's why. It hasn't been public very long. If you look at assets versus liabilities, I wouldn't say that's too bad. It's at least a pretty close to a 2-to-1 ratio of assets to liabilities. Price to book is 4.08, which is pretty low. It's not too bad. Return on assets is 4.13%. That is actually kind of low. I usually like to see at least around 5 or 6%. Return on capital is also pretty low. Usually you want something like closer to 8% on the low end, and that is a little concerning. I also like to look at the price to earnings ratio on Robinhood. Sometimes it's a little different than the one you see on Google because they calculate them in different ways. Their price to earnings ratio is about the same as the one on Google, so nothing really to report there.